Hi everyone, and thank you for joining me in another episode of my Q&A with Wall Street series. In this installment, I'm going to bring you the question and answer session from Tesla and Elon Musk with management and Wall Street investors. So let's get right into it. The first question is some analysts are claiming that Tesla orders net of cancellations came in at a rate less than half of production in the fourth quarter. Elon Musk chimes in and responds and says, demand far exceeds production, and we are actually making some small price increases as a result. So, if you're unaware, Tesla made some significant price cuts on its most popular cars in December and January, both in China and in North America. And some investors were concerned that Tesla had to make those price cuts because consumer demand was falling. And now they're wondering if even after those price cuts, if consumer demand is still slow. Elon Musk is putting that fear to rest, saying that demand far exceeds production. And we are actually making some small price increases now. So what they're finding is that the price decreases cause sales to jump so much that they're actually needing to increase prices a little bit because sales went higher than they thought. So that is good news for Tesla stock investors. That reduces that worry from consumer demand. Of course, that worry is going to persist throughout 2023 because competition is rising exponentially. Other EV producers are really ramping up production, and consumer budgets are getting pinched from rising inflation, and fears of a recession are causing customer demand for car sales overall to come down. And Tesla's not going to be immune to that risk. So this is something to keep an eye on for the rest of 2023. But it's good news that for now, the consumer response to Tesla's price cut was overwhelmingly positive. The next question is, after recent price cuts, analysts released expectation that Tesla's automotive gross margin, excluding lease and credits, will drop below 20%, and the average selling price will be $47,000 across all models. So this is a reasonable concern, and this is a point that I've been making on my channel. If you've been watching my videos, I highlighted that these price cuts are going to pressure Tesla's gross profit margins downward. Tesla has industry leading gross profit margins above 25%. However, with lower prices, that's going to cause gross profit margins to contract. And by the way, at the same time, the cost of goods sold are rising as inflation is causing prices for all of these materials to go up. Competition isn't helping either because now Tesla is buying the same materials that all of these competitors are now buying to ramp up their production. So the prices for EV specific materials are soaring. And so Tesla is facing rising costs, and at the same time it's lowering prices. So it's understandable that profit margins will decrease. So let's see how management responds to this question. So this time the CFO, the master of coin, jumps in to answer first, says, we believe that we'll be above both of those metrics that are stated in the question. So above 20% automotive margin and above 47,000 ASP. So that's a clever way of the CFO answering the question instead of saying that yes, our gross profit margins will come down because they were at over 25%. So even if it's, let's say, comes in at 20.6%, that would be higher than the 20%, but it would still be a sequential decrease and a year-over-year decrease from Tesla's gross profit margins previously. So it sounds like to me, I can infer from this answer that gross profit margins will come down, but thankfully the CFO thinks that they'll still be above 20%. So they're going to come down, but they're at least going to be above 20%, which is, it would still be a major drop. I believe in the most recent quarter, Tesla's gross profit margin came in at 25.9%, which was down significantly from the previous year. And if it goes down even more to 20%, that's, a big drop, continuous drop down in terms of gross profit margins. And investors have to hope that the decrease in prices are going to cause sales to go up so much that it's going to make up for lower margins, right? So 20% margins on 10 million in sales is better than 25% margins on 2 million in sales. So the key there is how much are sales going to go up, and are they going to go up enough to compensate for that decrease in margins? That's something investors are going to find out throughout the rest of 2023 as these figures, as these results start coming in, because the impacts of the price cuts are not yet in Tesla's quarterly results. These results that came out were before Tesla implemented the price cuts. So from this quarter onward is when we're going to start to see the evidence of the price cuts on Tesla's profit margins and profits overall and sales overall. Okay. So we're most focused on what our operating margin is. And so other areas of the business become more important, particularly the energy business, which is growing faster than vehicle business. We're heavily focused on operating leverage here. Improving efficiency of the overhead, we think, is the right metric for us to be focused on, is operating margin. So here's management telling investors, don't pay so much attention to gross profit margin anymore. Okay, and management do this a lot. Whenever one metric is starting to look poor, whenever one metric is starting to trend downward, management starts to tell investors, oh, don't pay attention to this metric anymore. Pay attention to this metric instead. All right, because when they're talking to investors, they want to make investors think their company is doing really good, so the stock price goes up. So this is management telling you, hey, yes, gross profit margin is going to go down, but you know what? Don't pay attention to that so much. Pay attention to this thing instead. So I always tell my viewers, be skeptical whenever management tries to direct your attention to something and away from something else, right? If they're directing your attention away from something else, it's because that's something that they're trying to take your attention away from, is something that doesn't reflect well on the company's performance. All right? That isn't to say it's not going to, because this is all speculation at this point. We don't know how the figures are going to come out in Q1 and Q2 and Q3 and Q4 after the price cuts get implemented. But just in general, this is just a general theme. When management tells you don't pay attention to something, I tend to pay actually more attention to that metric, because I know that's something that management is trying to take attention away from. So it might be something informative that looks poor on the company and they don't want you to look at. All right, so that's all I've got for this installment in this Q&A with Wall Street. Tesla, with the Tesla's most recent earnings call. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.